friends, welcome to Ram Sasdeva classes. In the previous session, we learned about various investments eligible for deduction under Section 80C of the Income Tax Act, where we can claim deduction up to 1.5 lakh rupees. In this session, we are going to discuss about the deduction on medical insurance premium under Section 80D of the Income Tax Act. So let's find it out. So friends, let's now discuss about the deduction under Section 80D. This deduction is available to individuals and HUFs. That is, no other SSC apart from individual and HUF can claim this deduction. This deduction is available for policies taken for self and family and parents. Also, there is an additional amount of deduction available for expenses incurred on preventive health checkups. We will take four scenarios and discuss case by case how much is the maximum deduction available under each scenario. Here, the family includes spouse and dependent children. So, friends, in the first scenario, policy has been taken for self and family, and all are below 60 years of age. So, this ATD deduction is available to the extent of 25,000 rupees for self and family, plus there is a 5,000 preventive health checkup deduction also available. However, it is important to note that the maximum deduction that is available in this scenario is 25,000 rupees. We will try to understand this with the help of an example in the subsequent slides. But let's now move to scenario number 2. In scenario number 2, the policy has been taken for self and family plus parents, and all of them are below 60 years of age. So as we discussed in the scenario 1, 25,000 is available as deduction for self and family. An additional amount of 25,000 is available for deduction for parents. Plus there is 5,000 available for preventive health checkup expenses. It is important to note that the maximum deduction is available is 50,000 rupees. In the third scenario, policy has been taken for self and family with who are below 60 years of age, plus parents, one of them is or both of them is above 60 years of age. In this case, as you can see, 25,000 deduction is available for self and family. However, the amount for deduction for parents has now increased to 50,000 rupees. That is, if parents are above 60 years of age, deduction is 50,000 rupees. If parents are less than 60 years of age, deduction is only 25,000 rupees. Again, preventive health checkup deduction is 5,000 rupees. There is a maximum capping on deduction, which is 75,000 rupees in this scenario. That is 50,000 plus 25,000. In scenario 4, the policy has been taken for self and family plus parents who all are above 60 years of age. In this case, the amount of deduction can be to the extent of 1 lakh rupees at the maximum. 50,000 is available for self and family, and another 50,000 is available for deduction for parents. Plus, there is a preventive health checkup amount of rupees 5,000 rupees. Here, an important point to note is deduction for preventive health checkup up to rupees 5,000 rupees will be within the overall limit of 25,000 and 50,000 rupees. In case of HUF, members of HUF who are below 60 years of age, 25,000 is available. Members of HUF above 60 years of age, 50,000 is available. So friends, let's now try to understand this with an example. In the first example, the actual expense incurred for health insurance premium for self, spouse, and children is 30,000 rupees. Plus, there is an additional amount of 10,000 incurred on preventive health checkup. So, the total expenditure incurred is 40,000 rupees. However, there are maximum limits under section 80D, which we discussed in the previous slide also. The maximum deduction available is 25,000 rupees in case of insurance premium. Here, the actual expenses incurred was 30,000. However, there is a capping of 25,000 rupees. Maximum limit is there. So the available deduction is 25,000 rupees. For preventive health checkups individually, 10,000 expense was incurred. However, the maximum limit is 5,000, and as such 5,000 amount is applicable deduction. Here, in this case, although the actual expenditure incurred was 40,000 rupees, however, the maximum limit that was set is 25,000 rupees. And as discussed on the previous slide, the deduction for preventive health checkup also is within the overall deduction of 25,000 rupees. So, as such, the total applicable deduction is 25,000 rupees. In case of senior citizens, the actual expenditure incurred in this case is 60,000. However, the maximum deduction available is 50,000, and as such 50,000 is available. For preventive health checkups for senior citizen, 10,000 was incurred. However, the maximum limit for preventive health checkup is 5,000, and as such 5,000 is available. However, even though the expenditure incurred is 70,000 in this case, overall expenditure incurred is 70,000, but the overall limit for senior citizen deduction is only 50,000 rupees. Has it been the case that insurance actual expenses incurred has been 45,000 rupees, then 45,000 will be available for deduction for insurance premium, and another 5,000 will be available for preventive health checkup, and as such again the maximum limit will be 50,000 rupees. So here for policies taken for self, spouse and children, and also for parents, the total amount of deduction available for the year is 75,000 rupees. That is 25,000 rupees plus 50,000 rupees. So friends, let's also discuss another example where deductions are made in where the single premium is paid on multi-year medical insurance policy. There can be a scenario where a policy has been taken for 2 years, let's say. However, the lump sum premium amount is paid at the start of the policy. In this case, since it's a one-time payment, we will have to calculate the deduction on a proportionate basis. In this case, the amount eligible under ATC deduction will be the amount of premium paid, that is the lump sum amount paid, divided by the number of years for which the policy has been taken. Let's say for policy has been taken for 2 years and the lump sum amount paid is 30,000 rupees. So here the eligible amount under 80D will be for every year for the two years will be 30,000 divided by 2, which is 15,000 per year. Again, the limit of 25,000 for individuals below 60 years of age and 50,000 for others will apply in this case. So friends, let's now quickly discuss another scenario. Senior citizens who do not have the health insurance plan can still claim a deduction up to rupees 50,000 rupees on the medical expenses incurred. In this example, Mr. A has incurred 75,000 as medical expenditure on his parents who does not have a health insurance plan. Even in such a case, he is eligible to claim a deduction of up to rupees 50,000. In another scenario, contribution has been made to CGS scheme, which is Central Government Health Scheme, CGHS. An individual can claim a tax deduction up to rupees 25,000 rupees for contribution made towards CGHS scheme or any other notified scheme by the government. However, any contribution made on behalf of parents is not eligible for this deduction. So friends, let's now discuss about the last important aspect, that is the mode of payment. In case of medical insurance premium and medical expenses, any mode of payment is acceptable other than cash. That is, cash deductions are not acceptable, not allowed as deduction. However, in case of preventive health checkups, even cash payments are acceptable. Any mode of payment is acceptable in case of preventive health checkups. So friends, this brings an end to this session. I hope you found this session relevant. Stay tuned for more such upcoming videos.